These could be some of the explosive opportunities in the hydrogen space. Here are just a few of the top hydrogen stocks to buy and hold now. Lind. Collect its yield of 1.25% as you wait for it to recover lost ground. New Fortress Energy. New Fortress Energy has been one of the best performing hydrogen stocks recently. Direction Hydrogen ETF. It's always a good idea to diversify at a lower cost. Let's dive in. Here are the 3 most undervalued hydrogen stocks to buy in January. Welcome to Timely Investment Research. There could be substantial opportunities for undervalued hydrogen stocks. That is, if President Biden loosens the proposed rules on hydrogen tax credits, making them far friendlier to producers, as E&E News notes. In fact, according to Senate Environment and Public Works Chair Tom Carper, Democrat Delaware, and Senate Energy and Natural Resources Chair Joe Manchin, Democrat West Virginia, the current guideline qualification issues should be lowered. I expect it to be modified, Manchin added. It can't survive the way it is. When and if that happens, hydrogen stocks could push aggressively higher again. Here are some of the most undervalued hydrogen stocks to consider. Number 1. Lind. The last time I mentioned Lind, it traded at around $350 on April 3rd. Today, still an undervalued hydrogen stock, it's up to $408.92, with a yield of 1.25%. From here, I'd like to see it closer to $480 if and when President Biden loosens the hydrogen tax credits. Better, the company continues to grow. Late last year, for example, Lind increased daily production to 30 tons per day at its Alabama facility. Prior to that, Lind announced an investment of about $1.8 billion in a new blue hydrogen plant in Texas. Helping analysts at Citi also just raised their price target on the Lind stock to $475 from $450, with a buy rating. Morgan Stanley also raised its price target to $54.50 from $420, with an overweight rating. And at the moment, we're waiting on its next earnings report due February 6. In its last report, Lind said it expected its adjusted earnings per share to grow 14% to 15% in 2023, up from a previous guidance of 12% to 14%. It also announced a $15 billion share buyback at the time and a fourth quarter dividend of $1.275 per share. Number 2. New Fortress Energy. There's also New Fortress Energy, which recently ran from a low of about $28 to a high of about $40. Now consolidating around $36, I'd like to see New Fortress Energy challenge its prior high initially. With a goal of transforming New Fortress Energy into one of the world's leading providers of carbon-free power by replacing fossil fuels with affordable zero-net carbon hydrogen, as noted on its site, it's one of the most explosive hydrogen stocks on the market. Helping, recent earnings haven't been too shabby. It recently posted earnings per share of 30 cents, which was in line with estimates. It also posted revenue of $514.46 million, which beat by $14.9 million. Plus, analysts at Stifel recently raised their price target to $46 from $40 with a buy rating. Number 3. Direction Hydrogen ETF. Or, if you want to diversify at a low cost, there's the Direction Hydrogen ETF. With an expense ratio of 0.45%, the ETF invests in companies that benefit from hydrogen production and generation, fuel cells and batteries, and storage and supply. While its chart isn't anything to write home about at the moment, get it time. Remember, should President Biden ease current hydrogen tax credit rules, related stocks could take off again. Some of its top holdings include Air Liquide, Shell plc, Bloom Energy, Plug Power, BP, and Air Products and Chemicals. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.